Hello and welcome to the Alt Asset Allocation Podcast. Today's interview is with Tijo of Arcane. There's a lot going on in crypto at all times, and it's very difficult, if not impossible these days, to stay on top of it all. Tijo prides himself in living on the fringes and identifying investment opportunities before they're mainstream. Very helpful in this space. Right now, Tijo is really interested in Web3 or blockchain gaming. You'll see this as a theme. I've had many other podcast episodes discussing this at length, but on this one, we go into detail on why this area might be interesting for Tijo, some learnings from being in the crypto market for so long, he's been in for a long time, and where the space could go going forward. If you enjoy this episode, please share with somebody you know who might like it, or give it a like, review, or comment on whatever platform you're consuming it on. I really, really appreciate it. Enjoy this conversation with Tijo. All right. Ready to go?
Yep.
Tijo, excited to have you on. Welcome to the Alt Asset Allocation Podcast, sir.
Thanks, Ben. It's good to be here today. Looking forward to catching up.
Yeah, likewise. It's been a long time since we met early on in the bull market of 2020 as part of Kernel, which is a Web3 accelerator. But it's always good to connect to people living in other countries, I suppose. So you're down in Costa Rica. I had recently just moved back to the US after 10 years abroad. So it's always nice to kind of reconnect with kind of people living outside the US, I guess.
Yes, everything's like a mixer. You go to different climates, you get a slight variation of all these things. Not a whole lot of, let's say, convenience living in the middle of the jungle, but it's absolutely stunning. So I appreciate my relationship with nature here. But it's like uncomparative, I guess, to other places. There's just nothing down here.
Yeah. Well, it gives you plenty of time to like connect with your metaverse friends and spend plenty of time on the internet looking at all of this Web3 stuff that we end up going down.
Yes, I'm grateful for the fiber optic cable that runs straight to my house here. Otherwise, I wouldn't be able to do any of this.
Damn straight. Damn straight. Well, you have a great channel. You spend a lot of time looking at the crypto markets, either trading or investing, like more VC approach, but have this broad kind of finger on the pulse of the crypto market. So it's ugly right now. This being recorded end of June. I was looking at some figures. So ETH is down 76% from its all-time high. Bitcoin down 70%, and then like the Nasdaq down nearly 30%. So it's not just crypto, but certainly as a risk asset, swings a little bit more. But wanted to have you on talk about the crypto market right now, and from your position, spending as much time as you do, what are you finding most interesting in the space? But before we get there, actually, I totally forgot. I wanted to start off with your your background, who you are, and what you're doing. That will be a little bit more relevant. So let's start there.
Well, I had no background that would have given any hint that this is where we would be in the future. I spent most of my younger years studying music and sacred plant medicines. So I was really into Indian music. So I guess there's where you'd find a similarity here. It's a lot of highly technical and abstract pattern finding. If you know anything about Indian music, it's got a lot of like sevens or so, these variations and time signatures that Western music just usually doesn't have at all. So became very adept at finding advanced patterns, very, very long obfuscated ideas quite often. And that over the years has kind of blossomed into a focus into venture capital, which is, if I could synthesize the two between how my musical interests ended up into an investment thesis, was again finding these patterns that seem to repeat and kind of how we can take advantage of them. Not all good ideas are profitable, but often if you can find that good idea early, it's extraordinarily profitable. So over the years, we developed Arcane, which started off with a bunch of podcasts and with PhDs in physics and biology. And then me as a kind of a long-haired hippie screaming on the beach that the governments were destroying the monetary supply through printing, and how effectively everything we were witnessing is a case of inflation, and that inevitably, due to whether it was malfeasance, ignorance, or total criminal behavior, that the banks would outprint themselves and Bitcoin would end up like at $6 million. So the Arcane Bear was kind of born off of this abstract pattern finding and early interest in crypto and Web3 technology. The last year or two, it's really pivoted towards Web3 gaming. It's a very uncontentious area. It's not like a scientific discussion. There's no statistical analysis on which characters like people like the best. Much like a TV show or a cartoon, you can have these grassroots adoption curves that come really just off culture and identity. So we think these are kind of really powerful confounding aspects of, more important, like, oh, well, my code does this kind of thing. Is, a lot of the times people are adopting through cultural in inference effectively. So we focus mostly on Web3 gaming now. But just as a broad kind of background, my interest was in music and studying, Indian music. So to how I ended up here, I guess, was through that love of finding patterns and signal.
Interesting. Interesting. Well, there's certainly enough noise in the space that finding any sort of patterns and eventually a signal is super, super important. With Web3, that's interesting to go from more of a philosophical like approach with Bitcoin into more of VC and ultimately Web3 gaming. Why Web3 gaming? I mean, how early are we before this is actually something that like the majority, are you thinking about mass adoption and this is like what winning at Web3 gaming is like, or what does kind of the timeline look like for you?
I think the first thing to do with any thematic approach is look at the core. So, we were never interested in games in general. So let's just look at games. Games have been around basically forever. People have found a way to play some sort of game with one another. So we know that games have, because been around for so long, they're probably going to be around for a lot longer. Now, the identity of what gaming is in these new digital cultures, I grew up not really understanding what YouTube was, but then you turn on YouTube, you find out kids making hundreds of thousands and millions of dollars playing video games, just talking about the games with no real, not even a real monetary injection from the game itself. And you've got esports teams. And then you start to stumble on the idea that the games are like this $100 billion plus sector. And in fact, they absolutely dwarf like the NFL, NBA, music, film, all of those industries combined almost, I think, are smaller than the gaming sector. So when you see that there's something that's already got a huge amount of like Lindy effect, which means that, we're not going to all of a sudden, like, people are not going to just do away with games. We're just going to continually see advancements of what games are to people, and how much value they bring into the individual's life and the community and the social aspects as a more ephemeral piece. But what happens when you start to pair IP or early brand and development, that most of the time I guess the participants in the game or in any company were left out of. So the blockchain has the potential to take a multi-hundred or like $100 billion plus sector and actually multiply it instead of take away from it. So because we already have this very profitable sector that transcends language or culture effectively, it's got that staying power. So we can assume that if you in fact empower the individuals who make games popular, the return on their investment, whether it was through the time of the YouTube channels, the way they play, is just going to increase already what it was. So it seems like when you've got a great vehicle, adding a supercharger is not a bad idea. And blockchain, Web3, however you want to look at it, I think there's a few conversations around what nomenclature it ends up being, but it would be the ownership of the identity of the game, I think, more in the hands of the participants. And in early 2017, I first thought that it was going to come through things like post to earn. Steam it, I thought, was a really great idea. We were seeing people in Venezuela who were able to pay for their bills by posting content. And we're crisis investors. We think the best opportunity is when people are this most scared. So if you have a moment where people are in crisis, like they're living in Venezuela, able to post content and make more money, we try to look for those fits early, because they signal to us, we think, the transition and adoption of something that's powerful for people who don't have the access to freedom as much as we do in these more, I guess, Western countries effectively. So you know, things to me like Bitcoin, they're most valuable when your money is the most at risk in central banks and from governments effectively. And you may not recognize how valuable that is until that moment of it being the most risky thing to have basically comes to bear. So in early 2013, I think just after 2012, maybe it was early 2012, December, or sorry, end of 2012, I'd have to double check, but the Sapritic bank collapse is really what sold me on Bitcoin in terms of the concept, that a bank can just come in, freeze up all your capital. Now, the gaming sector doesn't really have that often. People aren't storing hundreds of thousands of dollars on their game consoles effectively, but the IP and the brand identity itself is worth an extraordinary amount. So, I ponder, what happens if you had seen South Park born in the idea of like these 10,000 characters, and it was a podcast, and you happened to buy a Cartman or something effectively off of this list of characters that they were launching their show with. And the potential of brand identity alone and the growth of that is astounding. We recognize that visual brands last a long time. For better or for worse, I'll use Mickey Mouse as an example. It's been around for like 80 years or something, right? So we know that like a character within a brand can withstand a huge function of time. So it seems like it's the perfect storm for the video game sector, because it wasn't as wall gardened as the social media sector. I think this is why Steam it never really won, is because Facebook and Twitter just had such a stranglehold on all social media context, where the gaming world isn't really like that. You have these weird one-offs like Stardew Valley, where it's just one guy makes this entire game and it becomes this kind of overnight success. Well, obviously it took him quite a time to build, but there's no marketing team, no hundreds of millions of dollars poured into the game. It just hit a nerve with the community. And that never really happens in the social media space because it's so big and centralized. Whereas the game sector, you've got all these different gamers and producers and languages that it's been somewhat naturally decentralized. So I think there's a lot of power in the potential for the social aspects, the ownership of IP, that built-in economy growth. I try to make a few comparisons of just companies. If you're like, okay, well, how do we try to compare an older company? Let's assume that a company is already revenue positive, and I like Red Bull's a great example. Red Bull spends like $3 billion a year on getting people to jump out of planes and from spaceships and shit like this. Well, what happens if they just gave away $3 billion every year to their customers, and there's a way to keep track of who their customers were? And the NFT world offers us this type of mechanism that you could potentially build an identity within the NFT sector or this space as well. That your identity is based, well, how many Red Bull did you buy over the year effectively? So this membership or this buy-in becomes your place within kind of the early stages and growth and development of a company that no one ever got. The idea that you could pay $12 a month for Netflix and have 7 years of enjoyment, but if you didn't have X amount of dollars in your account, you couldn't have invested in Netflix. But if there was the option to also invest $12 alongside my $12 a month in watching, you damn rights I would have been making that investment. And often the problem is the average consumer has no way of actually participating in the upside of any of the growth of the company itself, because they're wall gardened out. And the financial sector has done a really good job of that. So it's to see that where the video game sector is coming from and the potential for this kind of floodgate to open, where it's been most adopted, where in the crisis regions like the Philippines, they run out of ways to find new work. You have this brand, this growth, the development. There's huge investments coming in, and people well, I'm not sure how well they're doing from Axie Infinity anymore, but we're looking for those glimpses of what might be able to happen. And we think that Web3 gaming effectively becomes that on ramp for a billion people to participate, whether it's with Bitcoin or Avalanche or Solana or anything. It acts as that on ramp where they didn't need a bank account, they didn't need an identity. They can come here and hopefully build that, and preferably without any government's help.
Yeah, well, and that's the potential. And I think a lot of this is hard because the blockchain within gaming enables these new game mechanics and abilities that previously were impossible or very difficult to do. But you mentioned Axie Infinity. I mean, this has been kind of parabolic up and back down kind of chart. Are there what are good examples of how games are integrating Web3 aspects, blockchain aspects into their game that will be iterated on and kind of be used in this future version of what blockchain gaming could be?
Oh, yeah. Technicals are not really my strong suit. Even with Bitcoin for something, I was trying to understand, okay, what's the value of decentralization? I try to look at these hard format versions of the way I understand the world. I was chatting with some friends earlier. I go off a little rant here to try to explain this, but one of the ways I understood Bitcoin's value of decentralization, which was just a storage of knowledge or data. And there's this old kind of cliche idea that people think there's no answer to, which is if a tree falls in the forest and no one's around to hear it, does the tree make a sound? And the answer is, of course, it makes a sound. Vibration is this very poignant idea that seems to travel literally through everything. So the recognition of something taking place is actually through this distributed mechanism. It's the ground, it's the soil, it's the birds. In fact, is like every molecule of the universe itself is technically receptive to that fall within its distance. So to me, I was looking at, okay, I don't know. I still don't know how the Bitcoin technically works, like in terms of code, but I know how it works conceptually. So in the game structures, economies, these things I don't know. Like the Bored Apes, I didn't see coming. There are a few me bits, World of Women. They're kind of like cultural brands to some degree. I've never really been one of the cool kids that knows what the cultural brand looks like either. I've been like the offshoot fringe, listen to Tool or something, not still really talented, but not like in the mainstream popularity. Like Taylor Swift fans are confused, But because of that, I think what's interesting is that in the gaming world, if having less of an interest or not less of an interest, but less of a knowledge of something has actually made investing a little bit easier because I'm willing to take more risks on things I generally don't understand. Here, really, I think we will rely on the most is if you have a brand adopted like that and the growth of that brand continues. That's really the most important part. All these in-game economies and whether people can vote and how you're going to use decentralization or staking. These are, I think, secondary almost because a lot of people are like me don't understand a whole lot about coding, but we appreciate art or things that we like. So I think the NFT sector kind of brought a lot of these conversations to life is, what do people recognize as valuable themselves? So, more than the in-game economies, because we were already witnessing that, like with Axie Infinity is a great example, just because they had they had the earliest adoption. First off, you're looking at a 1,000x growth in something like a year or two. So just as a comparison here, I will show this is the Axie Infinity chart, but just a sideline. There's Solana, so these huge parabolic moves are what we see through almost any growth cycle. But effectively, for every $1,000 you invested back when you and I were chatting in early 2020, you walked away like $1 million. And that's insanity, but it's also what you're looking for in venture capital. So again, what I think is the most unique aspect is actually this give back function to the community, where if you take a revenue generating business and instead of just spending it all on marketing, you're giving that marketing budget back to your customer. If your customer accidentally ends up with $1 million one year because they bought Red Bull like a year, like 6 months ago, they're ecstatic. They're going to post on Instagram for years to come based off that one moment. And I think that because the blockchain allows this mechanism of identity through your participation with any economy, whether it was the ENS tokens or the Ethereum name service or Uniswap, these big airdrops that people get for participating have actually yielded huge results. And I think that one of the interesting things here is more than the conceptual technicalities of, okay, if there's an economy and there's built-in staking and I could own like a ship in this game and someone could rent that ship and use that ship to make more money in the game. I think it's actually quite a bit simpler than that. I think it's that, first off, when things grow, the monetary speculation is going to grow right alongside it, regardless of if it's a value function or not. Like price and value are not necessarily connected. So early on in the growth of like a game's economy, it's hard to determine whether it's going to be successful because you have these large or these broader pieces. Like do people like the art? Is the gameplay any fun? And these are a lot harder to perfect, I think, than like a scientific experiment. So because you're based off the whimsical nature of people's interest in storyline. And anyways, the short part of this is I think the most valuable function within the economy is actually really simple. It's that you can give directly back to your community members through your growth. So aside from anything complex that you can do within the games, like I was saying, like renting ships or renting out your characters, just the fact that the company can grow and you're rewarded for that is probably one of the most important value functions the blockchain just inherently builds in. And it's almost through any chain that you can do this, but it's that relationship with early participation. Again, the fact that you couldn't buy Netflix for $12 a month, that micro share is so valuable because most of the time the games are going to fail. Like 90% of the time you wouldn't have gotten Netflix right. But when you do, that $12 a month, whatever it might be that you're putting in, ends up being orders of magnitude higher for people that would just never have the possibility to do that. Where you put $1,000 in Axie, you're in the Philippines, like it's the most money you've ever had. It turns into $1 million because you were playing a game is unheard of. But it's that value relationship, I think, with the community that's the most like important part of the way the ecosystem functions.
Yeah, no, and that's a very good point to kind of zoom out and focus on that, which is the value creation or the value sharing. I'm and you mentioned earlier, I mean, you hang out in the fringe, but like the fringe is where all the potential is, man. Who wants to be in the mainstream? Like eventually all these things will be mainstream, but the fringe is where it's at, especially in the beginning. Uh, with the idea of blockchain gaming, like what do you hear often that you just completely disagree with? I mean, aside from like getting way into the details about the game mechanics and not focusing on the big one, what other points do you have?
Mm. Because I think it's one of the fun parts here is that uh, I'm very opinionated about areas where we have data and we can use that data to make analysis of any kind. And one of the things I like about the gaming sector is that it almost doesn't exist. We know there's a lot of money here, but the success of that game, it's like a story. When you find writers like J.K. Rowling, you're looking at these authors who have often been turned down so often, like time and time again. So one of the things that's most exciting is I don't know what's coming next, and we're always trying to find that. I think that's what's most entertaining, and I'm not super opinionated about what that looks like. I would be if this were other fields because we would have data, but we don't really have that data here because that storyline can come from almost anywhere. And the way people, attach themselves to those characters effectively is I've never been able to pick it. There's a few times, I think, like I've been a fan of South Park since basically day one. So it's like there's a relationship to brands that we like and that we understand. But in terms of the way I think about making investments in games and where we're kind of opinionated, where it's like where are we going to be stubborn? We actually just try to have a thesis of, okay, how much are we willing to lose here? And I think this is an important part to investing that a lot of people get caught up in. It's really easy to have a survivor bias and then assume that you're smart and that you're getting it right because you're good at what you do. And often people are, but not always, right? We've just gone through a period where a bunch of companies that you wouldn't have expected have totally blown up, right? So it's not the appearance of success is often creates a level of arrogance. So I'm not actually super opinionated about anything in the gaming sector because I think it's so open still. I guess I would go back earlier to like how early. Well, we're still early in what this technology and what games can do over the next bunch of years. But more importantly, I think for me, being and I think just for anybody out there, if you find something that you think is valuable in the venture capital space or in the investment world, it's really easy to consistently build conviction over time, right? Because you know that you're going to get it wrong often. Like when I was screaming about Bitcoin going to $6 million and is at like $200, I was the crazy person, right? It wasn't necessarily glaringly clear that we would get this far in adoption or even this close, but making those far out predictions, you don't have to spend hundreds of thousands or millions of dollars in your first investment. And what we try to share with people along the way is kind of all the mistakes that I've made and how to circumvent those. And one of the aspects I think that's so important is that we can only lose this much every time we make an investment. So we're like, great, I'm willing to lose this much money on this idea, and we'll come back in a year or two and see if we're right. And as time develops, the ones that become the winners, the games that we like and that will develop over the next few years, we'll just keep investing in those. I think this last year we invested in, let's see here, Star Atlas, Rainmaker, Avocado Guild, Infinity Force, Decimated, Illumia, Solus, XTZ Zone, Ethless, Nyan Heroes, DeFi, Drop. So there's like a crap ton of games we invested in, and we know we're like, if we get one right out of those, we're super stoked. So it's always this kind of difficult game of, hey, we don't know what's going on. We know that we're effectively trying to get lucky because even the founders who are producing these things are getting lucky through so many sequences of event, the people they know, the capital, just the right kind of timing, the market waves. So I guess to simplify that answer, I try to be less opinionated about these early investments and just make them and just limit how much we're investing on the likelihood that it's going to fail. I was like, oh well, we've been so just invest less because I mean we saw $1,000 turn to $1 million with Axie. Like, why would you not want to risk $1,000? And we had the same thesis in early 2020 with Dogecoin. Everyone's like, well, Dogecoin's stupid. It's like, well, but people like dogs, okay, and the meme culture is fucking high up there.
Real strong.
So yeah, and in terms of a currency, actually Dogecoin is better than Bitcoin as a currency. At least there is some type of inflation. Effectively you need inflation in currency because there's more people, there's more businesses. It's not the inflation is not manipulated by any. It's a set rate of inflation. It's like, okay, why not? It's not a badass currency. It's not a bad currency, right? So there's arguments for things, I think, often of making limited investments, knowing that it's stupid dog coin here, but that the risk to reward relationship is asymmetric, so that $1,000 could turn into $1 million effectively. So that we try to look at it from how much are we interested in potentially losing to really test this theme over the next 5 years, and then we reassert our investments as we go. So just I guess to highlight that, try to assume we don't know what's going on here enough, are not super opinionated about, because I know nothing about the video games. Now, if you were to ask me about things I think I'm super right on that a bunch of people are wrong on, and outside of this sector, oh, there's a shit ton. But that's a
Yeah,
different
let's.
conversation, and
Well,
that's
I mean,
statistical data, and we get kicked off YouTube and LinkedIn and Twitter for talking about any of that stuff. So
well, no, I think that's a good approach. It's like thinking probabilistically, like thinking in bets with all of this. And like you said, you punt 100 or whatever the number is, $10, $100, $1,000, whatever, into a bunch of these. Eventually, you'll get that 1,000xer, and you'll probably have 95% of them go not 1,000x, but it's just that one or two that work out. When further reflecting, so you've been in the space for a while, you've done a lot of investing, thinking further through the like, oh, I want to make sure to internalize this learning and apply it going forward. What else have you noticed just from learning and reflecting on this?
so this one's I haven't been able to fully integrate, but I've learned it from experience of the words that are involved in it. So I'll give a few examples of what I mean by the outset before I get to the core central piece. But often we'll learn something very valuable in wisdom format through the words primarily first, and it's not until you get in have an experience with what those words actually mean that it becomes you can then use it, right? So I'll give an example first. There's this idea of buy when there's blood in the streets. Now, prior to March 12th of 2020, I hadn't really experienced that moment. But on March 12th of 2020, when the world locked down and everyone was rushing out to buy toilet paper, this is a literal moment of buy when there's blood in the streets. If you see people falling over, dying from unknown diseases, this is actually where you put your investment hat on and go, fuck yeah. So this alone is, okay, well, I don't know how many times I'd heard this idea of like buy when there's blood in the streets, people related it to candles. But no, it's you want, if bankers are jumping out of their rooftops and committing suicide, these are really good investment signs. So those are difficult words of wisdom because you need to often experience them to make them useful. And one of the ideas of kind of this wisdom behind investing that I've been working on is this thesis of like Wu Wei, which is often doing less rewards that has the highest rewards, at least in the investment thesis itself. Sequoia put out an article a few months ago that said they had lost $8 billion by taking profit. And what's difficult is when we see these huge growth curves, they also are followed by subsequent collapses. Whether it was there's Amazon or Microsoft, all in 2000 went up a bunch and then dropped around 80%. Now, when we're looking at a function of time, a good investment usually takes around 5 to 10 years, and you can quite often get 100x. Like 100x is actually pretty easy. If you find a good company, they've got a good name for themselves, like you can figure it out, which means you can invest $10,000 and within 5 to 10 years you've got an extra million. And that's a pretty achievable way, I think, for most people to get to success. So first off, like leverage trading over emotional, like trading often in general can do less. Now, this, how people deal with profit taking and going from one risky asset into a less risky asset, like buying houses or building companies, I think is extremely important. But just to simplify, this idea of doing less in the portfolio has actually yielded the most results. Is this idea that I'm trying to understand better, which is, one good investment over the course of 5 or 10 years can make tens or hundreds of millions of dollars if appropriated properly. And that it involves a fuckload less work than most people would think. I wrote about Matic and Fetch for almost 3 years in our newsletter between 2017 and 2020, the subsequent start of the new bull market. And at the first, when we were first looking at Matic, it went up like 80 to 90% off of its IEO, and then it retraced 80 to 90% of all that growth. And for about 2 years, it stuck around at a penny. And again, this idea of asymmetry through time, if had you invested only $100 every month into Matic over the course of 2 years, you end up with like $3,000 worth of Matic, which then turned into almost $250,000 within that last very strip of 2021, effectively. So this idea of how you can make more by doing less is one of the ideas I'm trying to figure out more of, because often we end up, especially in the bull market, you end up trying to do more work and you're talking to more people and you're building more connections. It's like, wait, hold on a sec. Some of the most successful stuff here comes from when you're doing less. So that's something I'm still trying to like fully integrate, whereas I haven't experienced the wisdom of that one yet, but I know the words of it. I know what the words of this wisdom sound like. There are things like buy right and sit tight, or heads I win, tails I only lose a little. And really understanding that asymmetry or any type of exponential growth is hard for us to fathom, because we don't know that a $200 investment or a $200 investment repeated 10 times is going to yield us $1 million in returns 2.5 years down the road. Like there's very few jobs you can get that will match that input to output ratio effectively, and it really had nothing else to do with just accumulate a good idea. And it seems that over time you can just continue to do that. So trying to find out that over the next few years, I think is important. So try to like highlight it with meditation or ice baths and all the fun things in life that slow us down, and hopefully end up with doing less work, but getting a lot more result back for ourselves and the people that invest with us effectively as well.
Yeah. So you said that was Wu Wei?
Yeah. So, well, there's Wu Wei is the Chinese terminology for it. It means like non-action, I guess, to some degree. Whereas,
Yeah,
or better situated is like the universe is doing something through you. There's a very easy example in music. You know much about Indian music, Ben?
I do not.
Okay, so you know what a sitar is, though, right?
Probably not. Maybe if I
Okay.
heard it.
Sitar is like this big instrument, huge strings on it, and underneath there's like 20 strings. And when the player plays the top strings, all the bottom strings basically come to life because they're
Oh,
in
that's fun.
tune with the bottom strings. So this is like a good example of what Wu Wei would be. If you were one of the bottom strings, what you're looking for is like the presence of life itself to come through you and effectively create the noise that you're making. So you're not doing anything extraneous. It's like the river of the universe is taking you for the ride itself, and you're just enjoying it. So there's a few, I mean, people talk about this in art, and you can get to these out of body experiences that are very similar, but investing is actually not disconnected from the rest of the world. So part of it is, okay, where are we going to be able to find these fringe ideas, make an investment and walk away? And part of the thesis is what's most effective, like a Wu Wei, is just basically doing less, and you end up with a lot more. There's a bunch of investments I made while I was trading and learning where I exited way too early. You make an investment, it goes up 10x, you exit your position just to watch it go up another 250x. And then if you wait another 2 or 3 years, it goes up another 100x. You're like, well, shit, 10x. What's all that stress and emotion? And I was thinking, like, it's clearly the opposite of what you want to be doing. And I think that the market itself has evolved to understand that humans are actually really bad at assessing these types of events, exponential growth or asymmetry of any kind. So it takes advantage of the emotional aspects of humans, which are very, very easy to manipulate through these kind of blood in the streets or overly greedy moments. They get overzealous, they buy outside of their velocity, outside of their capacity. So this type of human nature has been taken advantage of, and speculation is as old as music, right? So
Oh yeah.
there's certain things like this, yeah, that you can tell, okay, well, if the natural course of events would be to get in, try to trade, outsmart the market, forgetting that the market is like it's older than you are, it's older than I am. It's going to outlive people are going to be trading and speculating on shit long after I'm fucking dead. So this is one of the difficult things to contend with. Is like it actually is taking advantage of something that humans often get wrong, and the best way to deal with that is to basically do less.
No, and that's it's it's very good to like think about, but it's also very difficult to do in practice. And even like talking about blood in the streets, right? Like the psychological barrier for you to pull the trigger and buy things when everything appears to be burning down, or at the same time, you know that it's just like peak euphoria, greed running rampant, and you probably should exit. It's like it's very tough, difficult to balance those things. But so on that topic is like right now, one could argue that there's a lot of blood in the streets with Three Arrows Capital blowing up, like all of these, ETH is down 76%. Like that's pretty bloody. But there's a lot of macro risks and kind of other risks that this thing could still go down by another 76% pretty darn easily. So how do you kind of think through, I mean, does it go back to like thinking in bets, or where do you position yourself right now with the markets?
Well, this is a very difficult question because ultimately, where we are right now is in like a zombie market. The Federal Reserve since 2008 has propped up in everything effectively. So a lot of people don't recognize it, but the only reason the stock market is up is due to monetary inflation effectively. So we've kept alive companies that would never be able to survive through any regular earnings relationships at all for over a decade basically now. So there's a chart I think that kind of exemplifies this. So this is the S&P 500 in yellow, and the orange line is the M2 supply. So this is kind of an aggregate of the liabilities on the Fed's balance sheet, and you can see this pretty I guess correlative growth. Now, a lot of people you go, "Oh, correlation doesn't equal causation." It's like, well, the statistical significance here would actually say that it is actually caused by this. It's not just it's not an artifact of money printing. It is in fact the reason why everything is up so high. House prices, S&P 500 is all due to monetary printing. So, our sector falls in this category as well. It's all been inflated through monetary printing. Now, that's the first kind of danger and the macro headwind out there that's confusing, because when the Federal Reserve says, "Hey, we're going to raise interest rates to try to combat inflation," while there's a rabbit hole of things wrong with this particular idea. But what it does is it puts a lot of stress on the outer third world economies when they start raising rates, because most of these countries have to try to close their debts or buy oil or energy in US dollars. So now what you see is a kind of a breakdown of this global economic system where Russia and China are starting to do more trade with one another, because apparently Western countries think you can just stop using oil or some shit like doesn't matter. No, but so Western countries right now are going through a lot of stupidity, and I think that the woke culture is making decisions that's absolutely going to be unparalleled devastation in the market recession, or in terms of a recession. But there are a few other really strongly confounding factors that come into play here through deflation. Now, I was just reading a great article about bullwhips that Michael Burry had posted. This idea that the inflation is actually going to drop massively in the next CPI story, because of the way storage and facilities and hiring works within these kind of larger box retailers. Anyways, it gets kind of convoluted. But the point of this is, it's very likely the Federal Reserve is going to come out and start printing again and reduce rates. We are at a place where there is no good choice. The financial system that we have is broken. It's been corrupted and gutted beyond, I think, what people would ever begin to fathom. Like it is wholly and totally morally corrupt in areas of the corporate world and the capitalist world. And most people, that you think it's the oil companies. It's like it's way worse than I would have ever imagined out there. So we're at a pretty devastating turn of events, most likely for society at large. And I don't know how we make it out of this. Now, one of the reasons why I'm so stoked about technologies like this is because we're looking for an optimistic future. We're looking for a result of how does this thing that's clearly dying collapse into something better? I mean, I don't know how many trees I've cut down on my property here, but every time I do, there's another tree that's growing up in its place. So we know that the falling of one thing is not necessarily the death of all things. It's just usually the life of something new. So hopefully being invested in the next trees that are coming up. And ultimately, I think that what's most unique here is that there's the question is, does micro processing end up in micro governance? And it should. I think hopefully, inevitably, that what we see is something that's more closely related to a municipal style governance and monetary structure through the collapse of these much older, archaic, and totally morally corrupted pieces. So we could be in the throes of that right now. So what that looks like, it means very, very, I guess, equally is that the United States dollar is equally as a liability because we don't know where this goes. US dollar has been around for a long time. It's probably got some staying power. You could take it to countries all around the world and they all know what it looks like, generally speaking, or what a fake looks like. So the US dollar as like a cash reserve may function for a long time, but the biggest worry is that they don't start printing more. And what they do is they purposely collapse the economies through raising the interest rates of trying to effectively, we're like, hey, well, we'll offer you 20%, just like UST was doing. They call all the United States dollars back into the banking system, destroying most of the third world economies. And then as gas and bread lines start to take place, that people line up for new digital identities. So I think we're at war right now. I just don't think most people have fundamentally understood that the war has now gone supranational, and we're dealing with a faceless criminal effectively, because it's not just off the back of a single government. It's through all these policies and organizations of how law is administered over so many countries. And it's, I have a huge amount of faith in the human individual creativity and adaptation, because we have that. But I think the battle that we have to overcome potentially here could be devastating. Whether that happens today or tomorrow, I'm totally unsure of. But when the rooster comes home to roost for this U.S. dollar crisis that we will inevitably have to go through, it's going to be scary either way you look at it, because it means we've mispriced the value of almost everything, from life to food to air to water. They're all mispriced. And that's a big deal for a culture. So ultimately, I don't know. Normally, I'd be way more optimistic. But again, I think what's important is we focus on the Web3 gaming sector, on things like Bitcoin, because those, to me, are born in the crisis. They're born within the blood within the streets. And I think that they're the strongest suited for making it out the other side as well. Just, I guess, a kind of a survival of the fittest mechanism within technology.
Assuming it doesn't all end with pitchforks and torches, I think these things could have quite a bit of value on the other side. Indeed.
Yes. Yeah. Maybe even a smooth people transition. Value is kind of a hallucination. There's this idea that the United States dollar is worth anything is really just a global hallucination.
Yeah, but if enough people believe it, obviously, it is so. I so you've like Web3 gaming, Bitcoin, but then like in your profile you have Solana, ETH, Avalanche. Are you kind of how would you consider yourself? Are you like, crypto is pretty tribal, so that you have Bitcoiners, you have ETH, you have everything else. Uh, are you more prone to like Solana, Avalanche, Ethereum for gaming, or in general it's Web3 gaming, regardless of
No,
which
I have
chain?
we have an intuition that Solana gaming and social form this new space together. And that Avalanche and Ethereum are much better at some of the larger value functions within the system, right? Like if I'm moving $100 million around, I want the most secure platform there is. Whereas if I'm with Solana, with gaming, where you could be dealing with hundreds of billions of dollars, over a much broader perspective of people as compared to having like that 100 million or that $1 billion in just one wallet. So I think that Solana ends up kind of winning the race for games and drives a massive amount of volume and attention through this particular chain over time. But ultimately, what money is to people, what currencies they want to use, where value can be accrued through something like staking Ethereum or staking Avalanche. I'm not sure where the end result is, but my kind of guesstimate, because I'm not a tech person, is I look at Ethereum, I'm like, oh, this looks like a Honda. It's a really reliable, super safe car, more or less. It's got this fun little touring function, so a bunch of random people can ride on it whenever they want. But it's a Honda. No matter how much we soup up the Honda, it's still going to be a Honda. And Solana looks more like a Ferrari. And I've seen countless videos of Ferraris start on fire and Lamborghinis start on fire because they're high performance machines. They go just a little bit out of or just think it's a little bit out of whack with how much exhaust is coming out of the exhaust pipe or some shit. It's going to start on fire. It's ridiculously fast compared to the Honda. And then you've got a Tesla, a completely different vehicle altogether, effectively, but still a car. So I'm not sure. Both Ethereum, Avalanche, and Solana are all in the venture capital sector. Any one of them, in my opinion, could go to zero through some sequence of events. Although I think it's becoming harder and harder for Ethereum. There's just so much cultural background built there too that it's unlikely. I think it's got aspects of the early internet too that were very powerful, which is anybody can kind of make a website, whereas when you get into Solana, you're dealing with Rust developers. It's a much more specialized focus. You have to have years of development background and practice to do it. So not every person can just jump into Solana and start playing. But there's a higher quality of developer because they've spent their whole year getting to that type. So, we're looking at, I think, the development of different value functions for the people that are using it. So I think Ethereum will probably go for a long time based off even just the NFTs. Like Bored Apes and CryptoPunks could probably keep Ethereum alive in terms of its value chain, but it's got to run for its money with Avalanche. But all three to me are still in, damn, this place has evolved so quickly. What comes next in terms of the technological evolution? Like we went from tape or vinyl to beta to CD to DVD to MP3 to streaming music so fucking fast. Like I couldn't imagine being super invested in like making CDs or some shit for any, like it didn't last more than like a few years. So it's hard to imagine that when we're dealing with technology, how long these are going to be players. But every day each one of them exists and kind of proves their value function. I think it's much more likely that they'll have another day ahead. So all three of those landed in the venture capital. Like we're prepared to lose whatever we invest in each of those, but we think one of them is going to be the winner, and we actually think that multiple will be the winner. I think it's very likely that Solana takes over gaming, and that Avalanche and Ethereum kind of have this battle out for more of the primary financial transactions. And Avalanche has a few features in it that may give it the expedited process to leapfrog Ethereum if it has to in terms of the enterprise world. So that's a kind of short, long summation of that thought.
Yeah. No, that's good. I mean, the space is so broad that it's very difficult to keep an eye on like all of the intricacies between these these different ones. That's for sure.
Yeah, from the gaming perspective, again, because of that Rust developer base, that more I don't know, say culture designer developer, people that have just spent so much more time learning how to develop. I think that this is going to bring the better products to the table than the kind of open Ethereum Turing language in terms of gaming and social, and the cost to produce the results on Solana is much, much cheaper already. So, and again, this idea that it goes down all the time, I'm just like, well, a lot of shit does, and people will just get used to it.
Growing pains too.
Yeah, exactly. So
nice. Well, Tio, I've really, really enjoyed the conversation. I think there's a lot of good little tidbits here. Where can my listeners find out more about you? Where would you like to see them? Any parting words?
Oh, yeah. You can find us at arcanebear.com. Anywhere you type Arcane Bear. We provide a bunch of educational tools and formats, research. We've got a private newsletter. We're going to be opening a kind of a front end venture capital that everyone will be able to participate in too, which is really exciting for us because usually it's normally pretty closed. off to make investments. Like even getting into IEOs is quite difficult. So we're looking how we can open some of these rails up. But yeah, definitely check us out at Arcane Bear. Any of the support we're very grateful for. We lie on the fringes, so we'll probably scare most of the people off.
Well, like I said, the fringes is where it's at. Great to see you, sir. Great to catch up, and I'll link up all of these things in the show notes.
Yeah, it was a pleasure to catch up today. I appreciate the questions, and it's always fun to re-go over the thesis and share with other people what I think is going on. So thank you.
There you go. First off, thank you very much for listening all the way through. I hope you got a lot of value out of that conversation. As always, you can find show notes, links, and more at altassetallocation.com. Please share this with anyone you think might be interested and derive any value from this conversation. And as always, you can reach out to me for any feedback or questions. Please give the video a like, or even better, subscribe on YouTube or your podcast player of choice. This really helps others find the podcast or the video as well. Thanks a lot. Hope everybody has a fantastic day and stay safe out there and invest wisely. Cheers.